Trend lines are simply lines that traders draw on their charts during technical analysis that connect significant highs and significant lows. Traders commonly use trend lines in several different ways, and depending on how they use it is what information they get from the line drawn. Trend lines can be used to draw attention to the past or to chart out possible future market movements. Trend lines can be used as a form of kind of dynamic support and resistance, possibly indicating where price may have a reaction in the future. Trend lines can give a trader a really good idea at times of the direction in which a currency is moving in order to solidify a trading bias to say that you're either looking only for buys or sells. Trend lines can be drawn on a higher time frame to remind you what the higher time frame bias is so that you don't get on the lower time frames and get confused when it looks like the bias is the opposite than what you saw on the higher time frame. Trend lines can be used as a baseline in a strategy in which will be used for the indication of possible entries or at a minimum points of interest of where the price and the trend line intersect. I personally have never traded a strategy that has trend lines as a basis for the trade entry. I, however, love trend lines to draw attention to where market makers are engineering liquidity. It's my favorite way. And I also use to draw points of interest as to where trend line traders are putting their stop losses so that I'm paying attention to any manipulation in the market, which is where I'm looking to take entries. I love to take entries right after manipulation happens. And so I do sometimes use trend lines to indicate market direction on a higher time frame when I'm running through like analysis on several Forex pairs. But those are really the only two ways that I kind of use trend lines. Depending on how you are using a trend line is depending on what rules you have about drawing the lines. Sometimes rules are when you draw, that you draw trend lines like on the bodies. Sometimes you draw your trend lines on the wicks. Sometimes it's a combination of both. Sometimes they have to touch. Sometimes they don't. I usually say draw what makes sense according to your trading strategy and your trading plan. Here, I've just kind of displayed a couple of general trend lines where you look like you've got a downtrend, that's marking several lower highs. I've got marked where you have a consolidation and a little manipulation there, which is where I'm looking for my entry off an order block there. You've got a liquidity grab here, which I love as well. You've got an uptrend here. You've got several peaks and bounces off of that trend line. You've just kind of got a downtrend here. I didn't even connect the wicks or the candles. However, on the strategy that I'll show you on the next slide, because I'm just going to kind of give you a couple of strategy examples. This absolutely would have been an entry right here, and you would have grabbed that drop in the market. You've got an uptrend here, with a couple of bounces possibly on the trend line, and then you've got a downtrend here. And there are many, many trends within that downtrend. So right here, you've got this downtrend, but you've got a lot of trend lines that can be drawn, even where price is going up here, you could have drawn trend lines. You've got a lot of, trend lines that are within a trend as well. And so a lot of times you'll mark this higher bias or higher trend until that line is invalidated or traded through. Once that line is invalidated, or, say that line was extended out here, as soon as that price comes through and you see it's not just a fake out, but the price is going to continue to drop, this trend line becomes invalidated, especially in most people's strategies. But let's look at a couple of different ways that you can enter or incorporate trend lines into a strategy. When using trend lines for strategy entries, I have personally seen two different general uses paired with confluences to create a market edge. I know that this graphic is condensed, but what we're going to pop over in just a second to a live chart in just a moment so you can see it with a little bit more clarity there. But first, I just want you to take notice that you can absolutely, and many times do have trend lines within a larger trend, like I mentioned on the previous slide, and you see it labeled here. Here you've got the outer trend, you know, this larger trend line of price coming here and bouncing off this larger trend line. But then you also have multiple inner trend lines. You know, I've got 3. I mean, you could have drawn, you know, 500 within this. I just happened to pick out these 3, you know, within this main trend line right here. You know, so you do have, and there's different names for it, you know, the inside, you know, trend line and the outside trend line. So you do have both of those. But there's a couple different ways that I have seen strategies based around trend lines. And, you know, the first one is pretty simple. And I believe the guy was successful. There's been a couple ways, but there was one trader that I actually knew. And I think he was successful. One, because he also had the confluence with moving averages, which is a similar strategy to what my son trades. Although I think he got fully away from using any trend lines and then just went straight to the moving averages and some other different, you know, indicator confluences. But this particular trader that I happen to know truly trades and doesn't just market, he absolutely drew where he would pick any 2 points in the market, and then any bounce off that trend line he used for an entry until, like I mentioned a while ago, the trend line was invalidated or traded through, which wasn't just a fake out. So the other option, though, which is the one I'm more familiar with, and that if I was going to trade a strategy off of trend lines, this would be the one that I probably based most of it. But I would also probably put market structure. I would put, you know, a lot of looking at probably statistical analysis of what the volume of the market was at that moment, probably, as well as, you know, maybe a type of setup with it, and, you know, possibly an indicator confluence, especially if I was teaching it to someone else, before I even considered using this. But this would be the one that I think is probably the closest to having, you know, some profitability that could easily be made into a pretty solid trading strategy. And it's where you pick 2 points in your trend line, but the third bounce is your entry point. And at the third bounce, you would place your stop loss above the bounce and put your entry once the candle or once the price closes below the trend line. But you're also using multiple time frame analysis for consolidation, for confluence, not consolidation. I've been filming too long. For confluence, you're going to drop down. So let's say that you're trading on the daily time frame. You're going to drop down to like the hour, maybe the 30-minute, you know, and look for structure being broken or price to break through that trend line and retest it on the bounce before you enter. But let's just look at right here, just kind of, like I said, I know it's a little bit reduced, but you'll get it. So this is the first bounce of this trend line. This is the second bounce. If you entered right here on the third bounce, and let's say you put your stop loss here, even though price comes back as a fourth bounce, that either might be a second entry, but depending on your trade management, you might not would have gotten stopped out. You might would have taken some profit, but price plummets right after that third bounce. You also have, let's just take this outer trend line here. You've got the first bounce here. You've got the second bounce here. And you've got this third bounce. And look at price just flew right after that third bounce. Let's take this inner trend line here. You've got the first bounce here. You've got the second bounce here. And you've got the third bounce here. And of all the expansion that this trend line had, that was the biggest expansion move or impulse move that was made on that trend line. If you've got this small trend line here, you've got the first bounce, the second bounce, you got the third bounce of this trend line and price flew. Same thing here. You've got the first bounce, you got the second bounce, and really this was probably to be considered the second bounce and this one the third one, but I didn't want any questions, and so when I was looking at it, I said nope, this touched it, and then it came back and tested it for a third time, and price, you know, it was a live market, so but it fell pretty excellently, you know, went right in the bias. So that would have been a winning trade. And right here, we skipped this one. Here was the first bounce, second bounce, third bounce right here, and price moved up for a pretty strong move right there. It did have a fourth bounce, so if you were just entering off of any bounce, you would have had another entry. And so again, it just depends on how you're using, you know, the trend lines. Like I said, I have never centered a strategy around trend lines, but I do know I do know a couple traders that have done that, and I've heard and seen throughout the years many traders just be all in. I mean, they are hardcore trendline traders and they love it. And that's why I want to introduce these basics. One, to kind of go, hey, there's so many different ways to use trend lines, and some of them are just informational, just to kind of remind your eyes what your bias is. Oh, I'm only looking for buys, I'm only looking for sells. But some of the strategies do center around trend lines. So I wanted to introduce you for that. We're going to just take a really quick glance in the live chart, not really doing anything except just kind of randomly drawing some lines just so you can kind of see it, and then go to the charts yourself and practice drawing some trend lines. And we have some challenges for you to look at there in the course if you're doing that. Let's just look at some trend lines quickly on the chart. I, again, am not going to go deep into trend lines. I've explained kind of how I use them. I look more for manipulation and liquidity grabs, and for where trend line traders are putting their stop losses. So where the banks might do fake outs to kind of take out those stop losses. And so I look to be kind of on the other side of that. So I use trend lines for that way. And I use trend lines on a higher time frame just to remind me which direction possibly that I'm looking to trade if I'm doing analysis or streaming, you know, analysis on multiple pairs. So I don't really have it as a basis of any of my strategies right now, but let's just draw a few. And as I said, I know that there are trendline traders, and they have very, very specific rules around how they draw their trend lines. Sometimes they cut off all wicks, they don't include the wicks. Sometimes they include all wicks. Sometimes they, you know, they would ignore any signs of manipulation. You've got a lot of different, you know, types and styles of working trend lines into a trading plan. Again, I have always just kind of been like, do what makes sense. And sometimes multiple trend lines would make sense. And so draw them multiple ways. I mean, worst case scenario is you get more information and more possibilities of what the market would do. Remember when I said if you are going bullish, you are going to draw your trend line on the bottom at the higher lows that the market is forming. And if you're going bearish, you're going to be drawing your trend lines above the candles, marking the highs of the market versus the lows. There's probably strategies and rules that call for the opposite, and that's totally cool. I know for when I was trading fibs, I was looking at the opposite to give me some information in my strategy, but for trend lines, that's usually what's kind of typical. And so I just drew quickly just out a couple right here. And you can look, this trend line hits this wick right here, goes up, you have a second bounce here. If you draw this trend line on out, you have a break and retest where price went up the trend line, came here, broke through, came back for a retest, and then left. And so your whole strategy can be, no, I do break and retests on trend lines. And in that case, you know, you would have had a successful trade right there. I mentioned that one of the strategies that I know works, and that I know a couple people that have traded it, is only trading like the third bounce off of any trend line. And if you just drew a trend line right here of starting at this peak, oh, can y'all see that? Oh, you know what, let me move that over a little bit. If you just drew that starting at this peak right here, I'll redo it. Starting at this peak right here, after structure was broken, you're looking at a possible reversal. And so you start your trend line here, you have second touch, you had a third touch right here. And if you traded with that third touch, here was your third touch, and you would have bagged a good amount of pips, over 1,000 pips over, I didn't even notice how many days was that. I'm on the daily time frame. So this was about a month and a half of days if you were trading the trend line there. However, we see on this trend line that you've got, this is an outer trend line, if you would call it that. This would be the inner trend line, but there are other options. If you started right here or even right here and you saw this next test and say, okay, well, we've got all these bounces right here. You've got bounce 1 here, bounce 2 here, bounce 3 here. And if this was your entry right here on your third bounce, you would have gotten, depending on your trading strategy, about 915 pips. You would have had a possible additional entry here and a possible additional entry just depending on your trading strategy there. You also could have drawn, the trend line where you could look at, price going from here to here and going, is this a bounce? Entries, that you could draw it a lot of different ways. You have with a trend within a trend, counter trend, trend lines. If that's part of your trading strategy, you could look at a bounce here, 2, 3. You wouldn't have gotten very many pips. There's usually not as much momentum, on shorter, on counter trend entries. But I mean, you've got 1, 2, and this is your third bounce. And so even with that though, if you went, candle close, 250 pips, just depending on how you trade, or if this one was your entry here, if this bounce was your entry, still even at candle close, depending on your trading strategy, you could have pulled in 175 pips on that, just depending on where your entry is. And everybody's a genius in hindsight. Like, everybody can draw some random lines on the chart and think, oh, if it was live, I would have entered right here, I would have done this. And I'm just telling you, if it was that easy and if it actually worked that way and you saw things this way, that you wouldn't have a 90 to 93% failure rate in this, skill and in this craft. So it always looks like it makes sense later, but it's a lot of times a lot harder than it looks in a live market. You've got a couple of bounces here. You've got bounce 1, 2, you pick these 2 points. And on the third bounce right here, you would take an entry possibly, and you would put your stop loss right below structure right here. And just depending on how you managed your trade, that's a little over 1,000 pips. So, that's a pretty good trade, and it's a 1 to 18 risk reward ratio. So there's a lot of different ways, you can run trend lines. Right here, another one, you can run it just like this. Here's your third touch right here. 1, 2, and 3 for an entry. And you would have, depending on when exactly you entered and when you exit, about 800-ish pips. Pretty good. I'll take 800 pips any day. 1, 2, 3, 4. So again, how do you draw your trend line? Where, are you doing wicks? How are you drawing it? You know, what makes sense? Are you going to take this then as your resistance, go through where you had a break, retest? You know, is that your entry? And sometimes you just have to adjust your trend lines as you go. Again, it's real easy to see things in hindsight and you go, oh, of course I would draw it like that. Of course I would count that as a bounce. But again, you don't know in the live markets. But it is pretty cool, like I said, to watch these and to see if you can craft a strategy around something that you're really, really attracted to. There are people that swear by trend lines and channels, and they absolutely love it. And they've got, you know, very strict rules around how to draw them. I do not use them as the, you know, core piece of any strategy, so I don't do it like that. So again, I'm just drawing some trend lines, you know, on the chart. But what I am going to show you is right here, we're on the daily chart. I just drew this line right here. You've got, you know, several bounces in here, 1, 2, you've got a third bounce here. But if all I was doing was not entering off that and just using that to remind me on a lower time frame, you know, of what my bias was, if I say, okay, I believe price is reversing, you know, I am calling for buys right now. Well, then if I got down on a lower time frame, say the 15-minute, you know, I might think I'm going for sells on the 15-minute. I mean, what if I'm right here? You know, and I'm looking on the 15-minute and it looks like price is, you know, going down. You know, price is putting in lower highs. You know, and I go, oh, I'm for sales. This, wait a minute, you know, higher time frame is saying buys. And so a lot of times, you know, it can just remind you when you're on a much lower time frame what you have put into place on the higher time frame. So again, that's more how I use it, as well as, you know, I absolutely, before I enter, look for that manipulation that has happened. And so you'll see trend lines, but for me, it's marking where, you know, people are putting their stop losses, so that I'm looking for any manipulation that the bank runs, you know, on that, for me validating and bringing confluence to my own entry, to my own trade entries. So I hope this, you know, again, wasn't meant to be a strategy session, but just kind of exposing you to drawing trend lines, a couple different ways to possibly draw them and look at them, play with the charts. There's a couple challenges, you know, for trend lines, you know, in the course. And so enjoy those, get in the charts and play with drawing trend lines and see how you like it.